Hey, family, welcome back in. Hold up. Do that wind effect. Bring it in. Bring it in. How you doing? Yeah. Hey. All right. Hey, family, bring it on in, guys. Listen, nothing much really transpired or happened too much with our AMC stock, but as usual, like I said, we're doing a broader review of our markets. Much love for all the support. Guys, we're still up under the same algo suppression, just like we were talking about yesterday. We saw the pop. You're seeing it kind of respecting that line, that 516, but again, with this algo suppression, none of the technicals matter. You know, like I said, what our only true date is what, June 29th. Everything in between this is foo-foo. This is fugazi. This is games they're playing, and even Ray Charles can see that. But nonetheless, let's double tap in here with our boy Charles Payne, who is talking about the financial banking sector, because I was just saying the same thing, and everybody said the same thing in the comments from the last video. Whereas, like, how are we just skipping and acting like, oh yeah, everything's good, there is no recession, and then the next day, oh yeah, there's a recession come, and the next day, oh no, everything is good, and hey, wait a minute now. Who did they take us for fools? We're watching it happen. We're living it. You can't. It's like you accidentally hit your brother. You try to convince him that he ain't hurt, so he don't go and tell. You hit your brother. Listen, you're fine. You're fine. You didn't even. That's what it feels like they're doing to us. It's like, hey, no. I feel that outside. You know what I mean? But nonetheless, let's tap down in this and get to our keynotes at the end, baby. Much love for all the support, y'all. Let's get down to it.
And the banks for a moment. I want to welcome in the CEO of one of the nation's largest banks, in fact, based on total assets, loans, and deposits. Joining me now, Fifth Third Bank President and CEO Tim Spence. Tim, I want to get into how your bank is holding up. I'm calling this a bank scare, right? But first, help us out with the macro view, because for me, there seems to be three problems: messaging, money markets, and mismanagement. I'll start with the messaging first. I believe that when Secretary Yellen came out, to the microphone over and over again with implicit, explicit, implicit, whatever it was, it felt like she was giving a wink and a nod to the general public. Hey, if you move your money to one of these really large banks, you're going to be covered beyond FDIC insurance. And I think that was a mistake. Your thoughts?
Yeah, so first of all, hello, Charles, and thanks for having me on today.
Yeah, that's the truth. Shit.
Listen, messaging matters a lot, especially in an environment where the market is trading a lot more on narrative right now than it is fundamentals. And that's reflected in the decline that we've seen over the course of the past several weeks in regional bank stocks, despite earnings still being strong, and with the exception of a limited number of the folks that fit on the third item of your list there, that I think everybody else is well managed and in good shape. It's hard to criticize anybody in the heat of battle, but there is no question that the market would benefit from a little bit of the rational inattention that you mentioned a minute ago.
Yeah.
And that maybe we let things settle a little bit and then determine what the right policy response is.
All right, let's talk about the other M then, because you hit two of them. Money markets. I mean, what can you do to beat
And basically what he's saying is, in layman's terms, it would probably be better to let everything play out before you start giving a response of what we should or shouldn't do. But like at the end of the day, guys, this is how this is going to go down. There is no real utilization or need for small banks. This move is going to happen one way or the other.
Compete with money markets.
They just want to make it cheap for Chase and JP Morgan to buy them.
Sizable account there, trying to get a lay of the land, and they're saying, well, we're now offering 4% money markets. And then I looked at the woman and said, she said, I know. Right down the street, Citizens is offering 5%. It's a quandary for banks, isn't it?
It is. So first, thanks for banking in a local bank. I think that's a good thing for a whole variety of reasons I'm happy to get into. But there is no question that the ONRRP and the fact that it is anchored to within 10 basis points of what banks get from the Fed is putting pressure on margins and in particular on funding costs. I think we have hoped.
So like he just said, guys, it's putting pressure on margins. How this correlates through our system and how this stuff, like I said, the stress from the banking sector is going to be a direct impact of those who did fraudulent bad bets. Banks that you're seeing slip up and smash out. Citigroup, even though they're trying to show it's up 1% today, Citigroup is on a stagnant fall. If I'm not mistaken, Citigroup was up there in the hundreds at price. Now we're at $46. These are bad players. These are fraudulent players. I'm not sure if it was Citigroup that was shorting against AMC. I think they were trying to do a whole Kiki Kaka thing, like shorting AMC, and they had made it public, or I forgot which bank that was, but I think it was Citigroup. And then we've watched them over the last months just deteriorate and fall. These margins, these where short sellers and hedge funds, the reason we're in algo trading is because their money is snatched. They can't go and borrow money from people right now. That's why you're having these massive fail to delivers.
That as QT took hold and as the Fed got its work done in raising interest rates, that we would see some relief on that front. Less because of the impact it has on the largest banks, because we have the ability to manage it through a rate volume trade-off, and much more so on the impact that it has on the small community banks that don't have the big checking businesses or the commercial treasury management businesses that we do to use for low-cost funding.
So, Tim, I'm looking at your statements last night. It's just absolutely amazing, right? If any other environment, I think your stock would be like on fire, right? I mean,
I'm about to say, I'm looking, I'm like, who is this?
Phenomenal. The charge-offs, the non-performing loans, and so there's only two things. I'm looking here. You know, for instance, great slides, by the way. 60% of your total deposits are FDIC insured. That's great. 88% of the commercial consumer franchise highlights, 88% of those are insured. Commercial, though, I want to ask you about that because that's.
Well, Charles, what are you wearing the glasses for? You take them off to read.
Particularly for commercial banks, 26% insured. Is that going to be a problem for you?
You know, I don't think so. I would be worried about it if we didn't have one of the largest payments businesses in the U.S., but we're ranked anywhere from 2nd through 7th.
What are we talking about here?
In terms of national market share on commercial payments. And the reality, when you're serving large commercial clients,
even your bank getting spanked.
Millions of dollars on a day in, day out basis through their accounts, they have to carry more than $250,000 in balances.
He's like, get my chart off the screen, please.
88% of our commercial deposits are
negative 33% in the last 6 months.
That is enabled for treasury management and has payments volumes moving through it, which is the reason I'm really not worried.
This is the person in the banking sector trying to, just like I did the analogy with the little brother. Oh yeah, everything's fine. He even had to do a side eye. He looking down his charts. I'm like, no, brother, it looks like y'all getting spanked up too.
About our commercial deposit balances.
Before I let you go, then, in general, do you feel like this is on the verge of blowing over? Listen, a lot of finger pointing to you.
You know what he's going to say
about in the heat of battle. You know, what role did the shorts play? What role has social media played? What role has, mismanagement, the media played? Do you feel, though, like we're starting to come out of it? Just so you know, I'm not sure if you know, but
grinding them
investor
teeth.
Michael Burry
You
just
see him,
bought a
you see
whole
him grinding his
bunch
teeth.
of, stocks.
You about to lie.
Some of these other names. So a lot of them are catching a bid right now.
I didn't know that, but his timing's been pretty good in the past.
Yeah.
I think we've moved from the acute to the sort of chronic phase here. There's no question that the Fed's goal in moving rates as fast as it has and on tightening the money supply the way that it has been to slow down demand. And it's normal.
Look at this chart. 3 year is showing plus 47, but you see they hit $50. They're almost down 50% on this year move then. Because we're coming back down. That shows they're at $24. That's $10 above where their 3 year mark was.
After
and it's still declining. Like it's not curved. Credit. It's not bottomed.
Is it possible that there are some banks that are going to get caught offside here or there because they were overexposed to commercial real estate?
He's like, get my chart off of here.
They don't have the ability to manage funding costs. Sure. But in general, I absolutely think we are through the worst of it. And in particular in the regional bank space, where we do have the benefit of strong relationships and large local shares in the markets where we compete, I think we're in good shape.
Tim, thank you very, very much. I really appreciate it.
Appreciate that from Charles Pizzle. But like I said, guys, I just wanted to tap in with that because they was just like I was having a conversation with one of our fellow family members that he was in the same stance where he was like, they keep acting like everything's all good, but it's like, why are they acting like we can't see it? If everything's all good and it's bottomed, for it to bottom, y'all supposed to be trending up. There are still deposits being withdrawn. You still have the same financial situation. The dollar is valueless right now. We still have inflation that they're going to have to come and hit again, right? This is putting pressure on margins. Where are we getting this? No, and don't get me wrong. By no means am I thinking that America is going to go into obliteration. No, you're a fool if you think America's going to be gone. We hit that. We hit that red button before we do that. And I'm just saying, look, we just joking, but nonetheless, we're going through a generational wealth transfer, guys. But you got to cover that up in pandemonium. But you got to understand what the plays are and how these things are going. But it's just funny how they tell retail investors and their investors are on media one story. But if you've been invested in this financial market, you know the different story. If you go outside and buy something, you know the different story, right? That's just crazy to me. And that's just why, like I said, hey, this is the perfect thing. We were just talking about that. And then here we go with a Charles Payne coming in the clutch. But nonetheless, guys, taking a look at our AMC chart, we are still barcoding in the same pattern. Y'all shouldn't be sweating anything. I was talking to another family member who's on the same pivot where I am. One, my long-term portfolio, I just put more cash in that. Like I said, on the 12th, I purchased some more AMC, a small amount. Like I said, mass majority of my money now is moving to my long-terms and into my crypto. I'm building that thing, dollar cost averaging them. XRP, Tesla, NVIDIA, Apple. You need to have both of these. And the one that allows you to have a peace of mind. But two, you got to understand this. Now is the time to be moving like you understand what's going on. Now is the time to be moving like you want to be one of the haves, not the have-nots. Not to say that you're a have-not because you don't have money. You're a have-not because you don't have a purple Lamborghini. That's why. You know what I'm saying? But you're a have-not because we're at the woes of more money. Yeah, the haves is a certain amount of money that you can. Boom. I want to eventually. And I live out in Alabama. Buy an estate. Make a compound out there, have agriculture, something where that money's a buffer. You can step back and you don't have to deal with you in your own little world. You know what I'm saying? That's what financial freedom looks like to me. I know that I say Lamborghinis and boats and thoughts and things like that. That's just a funny thing. No, that's a pretense of just saying that. Don't get me wrong, I get filthy rich. I'm going up there. But it's a slow pattern, slow build. But this is about yourself, your future, and everything else with that. Nonetheless, tapping back in over here, like I was saying, we're doing clear barcoding. Guys, the play wants to snatch out and move early in the morning. What do they do? Now, how in the his would you go up to 524 and then have a sell-off back down to where you started? They're sitting here teetering this 516 level. Max Payne at 6. Some people saying Max Payne at 10. I'm still showing Max Payne still to be at that $6 level. We're barcoding. This is all barcoding movement. This is not real price movement. And that's what I was pulling up to here. Tell me these guys, how are we bouncing on 516 support? And like I said, I say that lightly because again, the technicals don't matter right now. They're not in this play. This is Fraud City, but here we are, 25.95% short. It's just continuing to climb. So we're going up to 26, waiting for that convergence across. We were at 8.25, I think, days to cover. Now we're at 8.34. Mind you, this on Friday, we were at 6 days to cover. We opened up on Monday, and now we're at 8.3 going to 9. How is that? How is that if you're going to close and say it was 6 days to cover? We opened up over the weekend where there's supposed to be no trading, and now it's 8 days to cover. Going up to 26% shortage. And then, of course, up here, and I'm going to show you our Starco track because it's actually higher than this. Here we are climbing up to 70% short volume of movement off in the dark pool. It's off exchange. Guys, this is the exact same thing that was happening prior, basically every pre-run. Every bump or a decent move we have, you have this right here. They are moving almost 70% of the shares through a dark pool. There's nothing tracking it, no one to say what's going on. Hey, I'm no doofus, but here we are climbing up on what we say, going towards 70% dark pool interest. We're back up here at 1.2 million shares at 78.2%. So just so I can understand this properly, y'all are borrowing more shares and the cost to borrow is going down. This is so blatantly fraudulent that it's letting me know how desperate they are. You can't even cover it up. This is nonsensical. This is nonsensical. Hold on, where was I at down here? Short percentage interest at 65.5%. We're 5% from 70. And look at how the numbers have been rising. You had this dump down. We're like, oh, yeah, we're going down to 40%. We're going back up to 70%. Tell me how that happens. So days to cover is rising. Short interest is rising. Dark pool volume is rising. But you want me to tell you the price? And then volume is stagnant. There is nobody selling or buying it right now. how is the price going down? That's all that you need to know alone. But pulling in, double checking here. Beautiful things. Like I said, I love Twitter. It's a great space. I really love retail in general, but this is our metaverse, guys. This is why the retail saga is just beginning, and why I know retail is about to take over, because of the ability to connect and pass information around at light speed. Let's go. Thank God that we are in this 2023. You could have been born in 1930. You hear me? You would have been having to write something down on a piece of paper and send it to you. But nonetheless, here we are. Guys, fails to deliver, and this is just a comparative, just so y'all can use your rational, right? Because this is the battle of attrition, but use common sense. AMC is the largest theater chain and most successful. Cinemark is below them. Cinemark gave AMC shares. We're looking over here. Fails to deliver, and guys, these is T-minus 35, so these dates supposed to have been covered, but they weren't. But shares are supposed to be coming on. So starting up down here, let's see where we're at. Where's our... All right, here we go. Starting from 511, right? 18 million failed to delivers. 15, 17 million. 16th, we have 5 million. The 7th, let me see. Yep, 17th, 5 million. 18th, this will be 3 million. The 19th will be another 3 or 4 million. That's really like, we'll call that 4 million. These are the dates that are coming in the future. Now compare this amount of failed to delivers, right, compared to what's going on in the same sector with the same type of stock showing the same movies. And you tell me we're not in the midst of something that you know has got to be going on, something about to happen. They're blowing off in this, right? But look over here. 793. 4 million. 841. 3.6 million. 11,000. 5.7 million. Another 11,000. 5.6 million. Coming over what? 290. 17 million. 67 failed to delivers. 18 million. The proof is in the pudding, guys. The proof is in the pudding. The vast amount of money, this is costing them millions and millions and millions and billions of dollars. Look at the amount of money that is being exchanged here in comparative. Highest number on this chart is 153,000 in cash. Highest number over here is 85 million. I mean, it's just simple correlation. Movement, price movement. Hit, hold. This is a chart that was showing out basically all of our price moves. Every time it spikes, what they're blatantly doing with manipulation. All the way down to where we are. Where you pop, hold, move, hold. This is not price movement. I'm not being shaken. I'm not being stirred when I can see clear evidence that y'all, hey, you can't even play the game properly. Retail has beaten the smithers out of these guys 84 different times, 84 different ways. And that's why I have people that, and it's not even that mass majority. It's just a few people. But I just want people to know when they come on this channel, don't just come on here trying to, oh, y'all, they're never going to. Hey, don't talk to us. We're over here in the play. We're going off of facts and statements. They're cheating. You're having to cheat to play. That's not us wrong. That's not retail will never learn. Hell no. Retail don't need to learn. Retail learned enough to get into the play and cause this. That's the key factor of it. And that's what I want to tap in with. Because I said, look at the price movement. I saw from this morning pre-market. All right, I saw, like we discussed, that 516 level. That's been one of our supports. Staying above that is kosher. It's a great thing to be above that 516 level. That means we're staying in that same range, right? But nonetheless, we're not going to base, and look how we're teeting and they're playing that line so hard. They're barcoding just to hold it at where that lower support was, right? But I want people to not be caught up in the price movement, but understand the play that we're in. Because we have more and more new retail members that are coming in, because I'm seeing newer people come in. I want everybody to know, if you've been here for 2 years, you understand this, but we still have some people that are just, These last 2 years, they done beat the emotions out of it. So, I mean, we just don't, it's blatant. But it just lets me know again, the more that you have to cheat, the closer that I know we are to a victory. Because if not, what's the point of this? What are you blowing hundreds of millions of dollars and billions of dollars for shorting a play, failing to deliver on those, right? That's cost, right? You're losing money. We're still up 30% on the year. So you're down. All shorts are down. What would be the entanglement to keep playing this unless it's something massive? And there's something massive going on. And y'all got all the way up to June 29th to try to keep this going on? It's impossible. It's impossible. What you think they're going to sit up here and be able to algo trade us at 516 for the next 2 months? That's impossible. There'll be more financial banking class for that. So that's why I sit up in our Twitter and I say, guys, hold on your check, but also take this time to be investing in quality companies with high pricing power. This is just bigger than AMC. This is financial freedom. This is about your business. This is your hedge fund, right? You're running your hedge fund. Get cash. I know people are caught up or bent up. You got a lot of leverage at AMC. That's still not an excuse for you not to be building up a nice, sizable position in other assets that are going to be good for your long-term longevity. You don't want to sit up here and play all hands on deck with AMC and you never were taking any money over here because it was just straight to AMC. No. If you don't have a decent amount of Tesla, and again, not financial advice, but these still facts nonetheless. If you don't have a decent position, and when I say decent, a start off, right? A start off position in Tesla. If you're not holding some Apple, some Nvidia, if you're not holding AI stock of sort. I don't go directly AI stock. Like I said, I'm buying the provider of those. So I'm getting my Microsoft, my Nvidia, because I know that's what they're going to run off, right? Apple, you're in that. You're getting exposure to that. VTI, you're getting exposure to that, right? But if you're not putting money out in the section, realty, start building up some dividends, right? Not to splash it out. Dividends are really for the latter half of life, where it's kind of like you put your money in there that pays you. But it's also good to start a dividend position now, because the younger you start it, right, or wherever you're at, it's going to slowly accrue, right? And that's going to be paying more. And as those reinvest, or you reinvest your dividends, that's going to grow your money more. And that's what this whole financial thing is about. So above AMC, guys, this is about retail. This is what the saga entitles. This is what our founder for our channels will come to where, we're talking about different stocks, different plays. Keep it updated with the market, because it's not just simply about one stock. This is the stock that we're in, because this is where it started for me, at least, right? Well, GME it started for me, but this is the next step. That's still the same play. Both lead the same play. AMC, GME, same thing. But you just keep your head on the swivel. Stay tight with it. Like I said, y'all are seeing the pops in beans before they have to do nonsensical shorting. You're seeing the synthetics pop. Just hang tight, because I'm watching more and more pension funds buy in, watching more and more institutions buy in. That's the same thing that happened 2 years ago. This same exact thing happened before we had a pop. Just remember, why would they be battering it down, right? Deliberately. Past you're literally watching all the other, go to all the other movie theater sectors and show me how is it that y'all aren't shorting Cinemark to the floor, right? But you're trying to short AMC to the floor. What was the price on Cinemark? I think Cinemark's up at $20 too, or something like that, or $15. How is a smaller company that does the same thing, right, but doesn't pull as much revenue, right, profit, doesn't have as many large screens, isn't the head of that sector doing better than the head of that sector? That's impossible. That's fugaziness. You're not going to fool me. Maybe some of y'all might be getting fooled. I'm not getting fooled by nonsensicals. Y'all, if you're going to lie to me, you got to at least make my lie good. These are some trash lies, guys. But nonetheless, hey, y'all, now is the time, as I said, XRP, XLM, HBAR, Bitcoin. Y'all go look in the description. Go check out that Ballot wallet, $35. There should be no excuse that if you haven't gotten a cold storage, that you don't start off with that Ballot wallet, right, and start building up and holding off. They hold all types of different assets. I buy different ones. You can buy 2 of them, or go get your Ledger Nano X. There's a discount for that as well in the description, but there's no reason now that you should not be involving and buying the assets. And 2, do not, and I repeat, do not just leave your assets, your cryptos, on exchanges. Now I bought some Pepe coin just to jump into that little fun meme thing. $50, nothing crazy. That's it. But those, I leave those on exchange. I don't care, But our stable coins, our real coins, you have Bitcoin, XRP, XLM, HBAR. That should not be sitting on a exchange. And especially, I stand on again, XRP. That's game changing. That's a game changer. But nonetheless, y'all, hey, listen, much love to y'all. Hey, I love y'all retail family. Thank you so much for the support. Keep the comments coming. I love being able to have these conversations because I can't really have these conversations outside of what I come in and tap in on YouTube. Because y'all still, nonetheless, no matter how you feel, what chip you have on your shoulder, no matter if you feel defeated or not, understand you are in the 10% of bracket of people that are moving into the financial markets. That's a massive accomplishment in itself that you've taken the initiative to go off and start learning and building up something. That puts you in a small tier of people anyways. So one, kudos to you for that. And then again, kudos for being resilient. Kudos for fighting. Kudos for learning more. All of that. And that's why I love y'all guys, all right? Much love, retail family. Yes, sir.